Palladium here we got to talk about. 'Cause, Palladium was on one of our scouting reports,
That's
right?
one of your favorites too. It's been a
Yeah,
bullish, just juggernaut.
it is a juggernaut. There's no doubt. I like Palladium more than I like gold right now,
Hmm.
but it's coming into a fairly important level of resistance. This is obviously, if you're trading Palladium, and we're looking at the futures, but PALL is the ETF, this is a time to trail up stop losses.
Hmm.
This is a time to scale out of a position to a certain extent. And Tim, there might be some people that watch this that don't understand what I mean when I say the word scaling out. Why don't you take a moment and just kind of explain it?
Well, scaling out essentially means you're going to take some of your position off the table. Okay. So for simplicity, let's start with 100 shares. 100 shares of stock is a standard lot. In the futures market, obviously, we'd be doing this on PALL, which would be the ETF version of Palladium. In the futures market, it would be more like two contracts. But
Mm-hmm.
if you do 100 shares or two option contracts or two futures contracts, you have the opportunity when you reach a first target to take some of it off the table. And if you think about like the trading scouting reports, the stock report, the option report, we always build two targets in that.
Every time.
And there's a real simple system where you would take half of your profit at the first target and trail stop and let the other one run towards the second target. And so it's
Yeah,
just taking a little bit off the table.
and really, the first target is where you make a decision on what to do with scaling or what to do with trailing the stop loss. Typically in a swing trade, that second target, unless we're big green candles, big red candles coming into that second target, you're most likely just locking in profit at that second target. First target is the conservative target. Second target is the aggressive target. When you're doing a bullish retracement like this here, where you have a higher high now coming down into a higher low, first target is always going to be the previous level of resistance. Second target is either going to be based on potential average yield, Fibonacci extension, significant whole numbers, extended trend lines. I mean, just, historical pivot points. If we're looking at some type of, breakout and we still have overhead resistance, things like that. But a lot of times when you're coming in, and I'll highlight this, as you're coming into that first target, you see it start to slow down here. And
Mhm.
that is that slowing impact. So you're all happy here, you're sad here, and then you're like, oh wow, that's just kind of looking like a little U shape right there. And so that's what slowing momentum is. And so at that point, you certainly could make a decision to lock in some profit. You can certainly make a decision to scale out. You can certainly make a decision to trail out the stop loss. But the only bad thing you can do is absolutely do nothing. That's the only bad decision you can do, is do nothing. You got to make a decision and take some action here because of what you're seeing in the data.
Yeah, I agree with that. Well, inaction is generally one of the bigger mistakes people make, either not buying, not investing, not doing something. It's okay to make mistakes. And actually, if you do it right, you will make a lot of mistakes. You're going to have stop losses and whatnot. But taking action when you see information that hit your target, I think that's very, very smart, Matt, as well.